Welcome to VNT. Please subscribe and hit the bell icon for more breaking updates. On October 10, 2025, Chinese buyers abruptly canceled $1.1 billion in U.S. soybean purchases, a move that stunned the global agricultural market and left American exporters reeling. The news broke early in the morning, catching traders, farmers, and government officials completely off guard. The announcement sent shockwaves through the Midwest, where entire communities depend on the success of the harvest and the promise of international buyers. Local news stations scrambled to cover the story, and word spread quickly from farm to farm. For farmers, this wasn't just a business setback, it was a personal blow after months of hard work and hope. Many had invested heavily in their crops, trusting that the long-standing trade relationship with China would hold. The emotional toll was immediate. Families gathered around kitchen tables, anxiously discussing what the future might hold, and wondering how they would make ends meet. The market's reaction was swift. Soybean prices crashed, futures dropped 15 cents, and panic spread across the agricultural sector. Traders scrambled to adjust their positions, and uncertainty rippled through the entire commodities market. Optimism about a trade breakthrough with China vanished in hours, replaced by fear and uncertainty. Farmers who had hoped for a resolution now faced the grim reality of a market in freefall. Corn and wheat prices tumbled too, as the crisis rippled through all major crops. The interconnected nature of agriculture meant that no farmer was immune from the fallout. The interconnectedness of agriculture meant a blow to soybeans was a blow to everyone. Equipment sat idle, and conversations in small towns turned somber as the scope of the crisis became clear. For farmers, this was no abstract headline, it was a financial disaster slamming the door on their best customer. Processing plants slowed production, and shipping terminals sat eerily quiet. The $1.1 billion loss created a massive surplus, guaranteeing depressed prices for months if not years. Silos overflowed with unsold beans, and the prospect of recovery seemed distant. The day the deals died marked a dark turning point for American agriculture. For many, it felt like the end of an era, with uncertainty clouding the horizon. The fallout would be felt far beyond the soybean fields, touching every corner of rural America and leaving families, businesses, and entire communities searching for answers. The soybean cancellations were the climax of a bitter U.S.-China trade war. Weeks earlier, relations soured as China retaliated against U.S. tariffs with export restrictions and sanctions on American tech. Each move escalated tensions, with both sides trading threats and accusations. The breaking point came when President Trump abruptly canceled a crucial trade summit with President Xi, dashing hopes for a deal. He threatened even higher tariffs, signaling a dramatic escalation. In response, Chinese buyers pulled out of U.S. agricultural deals, seeing them as too risky politically. The cancellations weren't just business, they were a clear message of deepening hostility. American farmers, powerless in these high-level disputes, became collateral damage. Their livelihoods were sacrificed in a global power struggle. The trade war's fallout was immediate and devastating. Farmers were left stranded, caught in a conflict they couldn't control. China's decision to cancel U.S. soybean deals sent shockwaves through the global agricultural market, but for those watching closely, it was hardly a surprise. This move was made easier by years of careful preparation and strategic planning by Chinese policymakers and trade officials. For over a decade, China has been steadily shifting its soybean imports away from the United States and toward Brazil, diversifying its sources and reducing its vulnerability to U.S. trade actions. Brazilian farmers, benefiting from favorable climates, advanced technology, and significant investment, eagerly stepped in to fill the gap left by the U.S., ramping up production to meet China's growing demand. This wasn't a sudden or reactionary move. It was a deliberate long-term strategy designed to insulate China from the risks of U.S. political pressure and trade disputes. By October, the majority of China's soybean imports were already coming from South America, especially Brazil, making the transition away from U.S. suppliers almost seamless. China's proactive stockpiling of soybeans over previous months gave it the flexibility to walk away from U.S. contracts without risking food security or supply shortages at home. With Brazil now a reliable and eager partner, China gained significant leverage to negotiate better prices and more favorable terms, further strengthening its position in the global market. Meanwhile, American farmers, who were once the dominant force in global soybean exports, now faced a formidable competitor, one backed by the world's largest and most influential buyer. The U.S. found itself effectively checkmated. China's pivot was not just economic, but a calculated geopolitical maneuver that reshaped the balance of power in agricultural trade. The pain felt in the American heartland was the direct result of this calculated shift, leaving many rural communities uncertain about their future. The global soybean market had changed, perhaps for good, as new alliances and trade routes redefined the landscape for years to come. Panic isn't a word farmers use lightly, but after the Chinese cancellations, it was everywhere. The loss of their biggest customer triggered real fear and desperation in rural communities. Many farmers had borrowed heavily, counting on sales to China to pay their bills. Now, they face plummeting prices and no clear buyer for their harvest. Conversations turned grim, stories of sleepless nights, tough talks with bankers, and fears of losing family land. The emotional toll matched the financial one. A way of life felt under threat. Farmers felt betrayed, caught as pawns in a global game they couldn't influence. The panic was real, because the threat to their future was existential. Timing is everything in agriculture, and the trade collapse hit at the worst possible moment. The key export window for U.S. soybeans runs from September to January, when most deals are made. The $1.1 billion cancellation in early October meant that window slammed shut just as it opened. Ships that should have been loading soybeans for China sat idle, the logistical chain ground to a halt. Brazil quickly filled the gap, and those lost sales were gone for good. Even a sudden diplomatic breakthrough couldn't undo the damage. Contracts were signed, ships were sailing. Each day without a resolution meant more unsold beans piling up, pushing prices lower. Storing soybeans is costly and risky. Quality degrades and space is limited. The pressure to sell was immense, but options were few. The missed export window threatened the profitability of the entire 2025 harvest. The trade standoff wasn't just about soybeans, it was a high-stakes legal and political chess match. China was waiting for a U.S. Supreme Court ruling on whether President Trump's tariffs were even legal. If the court struck them down, China could win without making concessions. This legal uncertainty gave China every reason to delay a deal, leaving farmers in limbo. The threat of more tariffs lost credibility as their legality was questioned. The entire conflict was stuck, dictated by court calendars, not farmers' needs. Analysts predicted no deal until well into 2026, if ever. For farmers, the wait was devastating. They couldn't afford to stand still. They were trapped in a waiting game with everything to lose. The China trade crisis sent shockwaves through all of U.S. agriculture, disrupting the rhythms of rural life and upending long-standing expectations for farmers across the country. As soybean prices crashed, corn and wheat followed, dragged down by negative sentiment and a strong dollar. The ripple effects were felt far beyond the fields, impacting local businesses and rural economies that depend on healthy crop prices. Farmers growing both crops faced a double blow, two main cash crops losing value at once. Many worried about how they would pay their bills, keep their operations running, or even make it through the next season. Wheat farmers suffered as a stronger dollar made U.S. exports less competitive globally. Shipments slowed, and unsold grain piled up, leaving many to wonder if their markets would ever recover. The livestock sector reacted differently. Cattle markets surged to record highs due to tight supplies, while hog futures plunged. For some ranchers, it was a rare moment of opportunity, but for others, volatility brought new risks. Pork producers, heavily reliant on China, feared further market restrictions. The uncertainty made it difficult to plan ahead, and many braced for more losses as trade tensions escalated. The crisis exposed the complex web of American agriculture. Some sectors suffered, others thrived. Every link in the chain, from seed to supermarket, felt the pressure in different ways. The fallout was uneven, creating a patchwork of winners and losers. In some regions, hope flickered, while in others, despair took hold. For many, the pain was immediate and deep. Families faced tough choices, and the stress weighed heavily on entire communities. The trade war's impact was felt in every corner of the farm economy, from equipment dealers to local diners. As uncertainty became the new normal, the future looked uncertain for all. Questions about survival, adaptation, and resilience loomed large over the heartland. The only certainty, American agriculture had changed, perhaps forever. The road ahead would demand new strategies, fresh hope, and a willingness to adapt to a world transformed by global forces.